And similarly, in Singapore, that's the same issue. So each country has slightly different moments in time. Like Rishi Sunak in the UK was incredibly pro-crypto, and that government is now probably changing over. So we have to sort of, at any given moment, there's somewhere in the world where we see a big opportunity. President Milei coming in Argentina, for instance, has been super pro-crypto, right? So we just, in the global landscape, we sort of see who's in office, who's going to lean in and work with us. We grow our business there, and then when the guards change, in who's in office, we get an opportunity a few years later, and we grow it there. So we have a very long-term point of view on this. Whether it happens in any given year or decade in a certain country, we know the trend is clear long-term.
At the State of Crypto Summit last Thursday, Coinbase CEO Brian Armstrong told ARK investor Cathie Wood that the cryptocurrency business has become a huge political issue in the US, and that Democrats and Republicans are discovering its relevance to voters. Brian remarked that crypto is becoming a nonpartisan topic that could affect the November presidential elections, showing the industry's growing political power. Both parties realize they must resolve this. Later in the conversation, Armstrong stated cryptos arrived and negotiations focused on clear cryptocurrency rules and consumer protection. Armstrong noted that the House of Representatives Financial Innovation and Technology for the 21st Century Act FIT 21 and May FIT 21 divides cryptocurrency regulation between the Crypto-Friendly Commodity Futures Trading Commission CFTC and Gary Gensler. The ESIC, the FIT 21 Act, clearly controls cryptocurrency. It says the CFTC will regulate functional, decentralized blockchain networks while the SEC will regulate centralized ones. In a Senate Appropriations Committee hearing on Thursday, Gensler and CFTC Chair Rostin Beham were asked about cryptocurrency regulation. When talking to Cathie Wood Armstrong, Beham said his agency was ready for the job and that these moves indicate exciting times for crypto and digital assets in the US. The pair discussed spot Bitcoin ETFs and institutional interest in the industry.
We fundamentally see crypto as a technology to update the financial system. The financial system it's slow, it's expensive, there's unequal access around the world. And the mission of Coinbase is really to increase economic freedom in the world. And so we're really passionate about this idea of how do we create good financial infrastructure for people all over the world that enforces things like property rights and sound money and free trade. And the beauty is that smartphones are now so inexpensive. You can buy one for maybe $10, $20 in anywhere in the world. The poorest people in the world now have smartphones. So if you have a smartphone and an internet connection, you can now have access to good financial infrastructure, property rights, the ability to earn a living, make a better life for yourself and your family. And that's a really powerful idea because economic freedom is kind of this underpinning of all progress, right? Like more people are going to try to do good things for the world if they believe they can keep the upside of their labor.
Absolutely.
And America sort of takes this for granted sometimes because we're an anomaly historically, but many places in the world that's not the case. If you do manage to accumulate some wealth, it could be seized, confiscated from you, it could be devalued via inflation. And so if we're actually able to increase economic freedom globally, it would have an incredible outcome in terms of it'd bend the curve of progress for all humanity. So that's really what we're hoping to do with this technology. Yes, probably the biggest obstacle is regulatory clarity.
Definitely.
Unfortunately, the US is a little behind on this. Europe has already passed comprehensive crypto legislation. We've seen most of the G20 is actually already drafting or has implemented crypto legislation. And so there's broadly this recognition that this technology is here to stay. It has incredible innovative potential. We need to make sure we prevent consumer harm, things that happened with other companies and everyone's aware of. And so the US, I just got back from DC, a couple days in DC. I met with 12 or 13 different members of the Senate. The Senate is very eager to move on legislation now after the House passed the FIT 21 bill, the market structure bill, with strong bipartisan support. More than 2/3 of the House voted for it. And so the Senate now has a couple of bills being drafted that they're hopefully going to turn this into law, whether it's in this Congress later this year or the next Congress. So we've got a lot of work to do there, and it's important that America gets this right. In the absence of that clarity, I probably don't have to tell all of you, there has been a bit of this turf war between the CFTC and the SEC, the two federal regulators. Are these commodities? Are they securities? Our point of view is that the tokens, underlying assets are commodities. There could be an investment contract or something like that on top of it that is an actual security. Like if a company is going to raise money, that's a security. There should be a path to register those, broker-dealers that can trade them. And we'd like to work with the SEC to make that happen as well. But if we don't have Congress step in and act, the lack of clarity is just going to be weaponized and not allow the industry to thrive onshore.
The CEO of Coinbase also said that he and other crypto executives have been meeting with senators and representatives from both the Democratic and Republican parties in Washington, D.C., to make sure that the industry is properly regulated. The lobbying money will be used to help crypto-friendly congressional candidates win their upcoming state primaries. Coinbase, the Ripple, and his 16Z Andre and Horowitz's private venture capital company gave $25 million to Fair Shake's PAC Jump Crypto. The creators of Solana's Fire Dancer also said they would give $10 million to the U.S. campaign's Super PAC. There was a report from a consumer advocacy group called Public Citizen that said Fair Shake and other super PACs connected to the digital assets industry raised the third most money of all super PACs before the 2024 election. Fair Shake has spent over $1.3 million, with over $10.7 million going to campaign against Kate Porter, who is known for being tough on the cryptocurrency industry. Representatives Dusty Johnson R. and Josh Gottheimer D. were very important in writing and negotiating FIT 21. Each has received $122,000 for their campaigns from Fair Shake, with the most recent gift coming from Jump Crypto. During the talks with Wood, Fair Shake has raised almost $169 million in political funds. Armstrong also talked about spot Bitcoin ETFs and how big companies can invest in Bitcoin and other digital assets. Here are some more conversation clips.
There's about 10 markets around the world where Coinbase has set up local operations, and each of those has a slightly different story, right? Just to give you broad strokes, I mean, it's funny, in the UK and in Singapore, for instance, they don't have this issue that we have in the US of having a separate commodities and securities regulator. They just have one regulator. So for instance, the FCA in the UK, this is a total non-issue. The question about commodities and securities, it never comes up because they just have one federal regulator, so it's not politicized, right? And similarly in Singapore, that's the same issue. So each country has slightly different moments in time. Like Rishi Sunak in the UK was incredibly pro-crypto, and that government is now probably changing over. So we have to sort of, at any given moment, there's somewhere in the world where we see a big opportunity. President Milei coming in Argentina, for instance, has been super pro-crypto, right? So we just, in the global landscape, we sort of see who's in office, who's going to lean in and work with us. We grow our business there, and then when the guards change, in who's in office, we get an opportunity a few years later, and we grow it there. So we have a very long-term point of view on this. Whether it happens in any given year or decade in a certain country, we know the trend is clear long-term. You're correct that retail did jump into this space a little sooner over the last decade, but I'd say in just the last year or two, we've seen an incredible amount of institutional adoption, and I feel like institutions are fully in it at this point. Really? I mean, we released some stats in this State of Crypto report that showed 56% of the Fortune 500 executives report their company is working on something on-chain in crypto, right? And so it's the biggest companies in the world. BlackRock is helping tokenize real-world assets. JP Morgan has an on-chain project called Onyx. Google Cloud is accepting crypto payments. St. Jude's Hospital, and then fintechs like Stripe and PayPal, they're adding stablecoin support. So 56% of the Fortune 500 is doing something. I think this is really here to stay. It's already happening amongst institutions. And Coinbase can play a big role there too. Our Coinbase Prime product is the most successful in the institutional space, and we've got about a third of the top 100 hedge funds, our clients. A lot of them are also looking for that regulatory clarity moment, and I think when I talk to the institutional investors often, they'll say, once we feel like there's regulatory clarity, which will not be some moment in time, it's a gradual trend that's happening. They're like, that's what would cause us to put 5-10% of our portfolio in instead of a couple of percent. But I think you could argue we haven't really seen the real inflows happen even in ETFs, and they've already been really good. I mean, from the numbers I've seen, there's far more demand in ETFs than is being mined every day from Bitcoin, for instance, which is a positive indicator. But you're right. I think Morgan Stanley, UBS, some of these firms, they haven't really enabled the ETFs where we'll see even larger inflows in the future potentially. I don't know why that is, but the ETFs were actually is an area where we did get regulatory clarity. So this will happen in bits and pieces, and I think it's an incredible first step.
Yes. And then let's get into products, Coinbase's products. Which are the most exciting products to you these days?
Yeah. Well, the first one is really a technology improvement that'll enable lots of products. But if any of you haven't seen Base, it's our layer 2 solution. It's really important to help blockchains scale. And so, layer 1 networks were the first thing that happened in crypto. They were kind of slow, they were kind of expensive, but you could see the potential of it. With layer 2 coming online, it's kind of like when the internet moved from dial-up to broadband. It's actually enabling things like you can now send USD coin instantly anywhere in the world for free. And that's a game changer for things like payments and remittance and all kinds of things that just reduce friction in the economy. So that's one. Derivatives is another thing. We now have our derivatives products live both in the US under our FCM and internationally and our international exchange. That's an important part of any sort of.
Armstrong emphasized the need to use digital payment systems to change the old-fashioned banking industry in both the conversation with Wood and a recent interview with CNBC. In the CNBC interview, Armstrong said that his company plans to release new features that could make customers choose the Coinbase platform as their main bank account instead of their traditional bank accounts. He said that banks use a method called fractional reserve, which comes with its own set of rules. "We're not trying to become a bank," he said. "We're trying to become people's main financial accounts." This means that as money becomes digital and people use mobile money on their phones will become their bank accounts. Armstrong also said that leading players in the traditional finance traffic are quickly adopting crypto, which is good news for the digital assets industry in the coming years. Please share your thoughts on the interview and Armstrong's predictions for the industry in the comments section below. Do you like this video? If so, please subscribe to the channel and turn on post alerts to see more videos like this.